Mic check, mic check. Think we're about good. Mute myself here. Mic check. All right. And just like that, we're ready to start. Hope everyone's doing well. We're back trying to work with the settings. OBS is definitely funky on this computer, so bear with me as I continue to improve and just understand more. Already looking like I'm a little bit laggy, so I might have to mess with that, but let's see. I guess you probably can't do it during it, but got to do further research on it. Hopefully it's not too bad. If it is, we'll go from there, but it's officially official. GameStop has announced the release date for their Q4 earnings and full year earnings for 2023, which is definitely exciting. You know, it's been, oh, it's going to be this date, it's going to be that date, and whatnot, and now it's officially official. So, as I tweeted out the other day, and it's true, and we'll see what happens, right? Because ultimately, it comes down to execution. It really comes down to them executing, and we'll see how much so did they execute throughout the past year as a whole. I mean, obviously, we've already got the first 3 quarters, but we'll get the full year report. And Ryan Cohen does have the ability to purchase securities of some kind or invest the company's like extra cash reserves, which they do have a decent amount of at this time. As per last quarter, they had almost 1.3 billion in cash equivalents, marketable securities, a little bit less, and we'll see if that's invested. Right? Maybe it doesn't happen right away. Maybe it's something authorized for plans down the line. But there's speculation that it's going to be Bitcoin, it's going to be other stocks, it's going to be for something we don't expect, right? I guess we're really going to have to see. We have a lot of time. So hopefully the lag isn't too bad. I'm trying to look on the second screen over here. It looks like the overall video quality got better than last time, but maybe the webcam isn't so good. But we're going to keep working on it. We're cycling through. We're moving to the next chapter here. And definitely going to go through the last 10K. And something I wanted to look at today is the business priorities. And this changes a little bit each quarter. It's pretty much the same, but it'll be interesting to see on the next 10K if this changes in any way. But overall, the bottom line here is we believe the combination of these efforts stabilize and optimize our core business are critical to achieve sustained profitability to enable long-term value creation for our stockholders. So right now, it's obvious revenue isn't growing, and they do have to get back to that at some point or another. But for the time being, if you're turning a net profit on the bottom line, your margin is net profitable at the end, then you're able to continue to just execute and improve in what you're already doing. And that's not flashy or super exciting. And I understand that's not going to warrant like a ton of investment interest from a lot of the average individuals out there. But I think it's just such a unique story in itself and everything that's gone on around it. And if the company can turn a profit and then deliver on shareholder value, I think the stock is going to be worth much more. That's my personal opinion. Of course, you're more than welcome to disagree, but it all comes down to execution because now they put themselves in a spot where being profitable is very, very important. And if they are profitable from here on out, then the options are out there, right, in terms of what to do. So it didn't work out the NFT marketplace, and distribution centers closed down, and people say, "Oh, this is all bearish, all bad news," right? But ultimately, they're able to keep driving forwards and pivoting in terms of what they believe is best to move forward. And you have Ryan Cohen and the management team in place, and they're the ones that get to make these decisions, and that's why you have that trust in management when you're making an investment of any kind. As much as I love my GameStop shirt, I do have to take it off. I'm sweating in here for some reason. I'm just trying to get the side cam on, or not side cam, but side computer, because it's easier to read the chats than from on my phone or like having it up on the side here. Just have it going on the side, not side of what I'm streaming, but side laptop, which I used to stream from, and with that, the thing is the laptop's nice. You can move it. Maybe got a better setup than this at times, but it's a Microsoft Surface laptop, so unless I upgrade that, it doesn't run very well. But Tom, hope you're doing well. Sharon, hello. Hope you're doing well. Thanks for popping in. Oh, you know what I realized? I did not tweet out this stream. That's what we got to do real quick. So I'll just do that over here, actually. Do it on the side. Because It's coming up quick, right? GameStop earnings is coming up quick. You guys probably can't see it. My camera might be covering it, but calendar on the 14th. The report date is the 26th, so that's 8 trading days away. And I already took that Tuesday off, so I'll be streaming for earnings. Stay tuned for that. That should be always a fun time. Okay, now we're good here. Let's tweet this out. Hello, Mr. Tetron. Chad, hope you're doing well. Mr. Chad Clifford, thanks for popping in. But we'll see, right? Because I understand where people are like, oh, well, Web3, it's not working out, this and that. And I don't think they're necessarily like totally giving up on it because I think Web3 and gaming makes a lot of sense, like truly being able to own your assets. And it's one way that the Ethereum chain can scale because I believe in Bitcoin a lot. And not that I don't believe in Ethereum, but I think Bitcoin will go up more in value than Ethereum. I mean, take that with the utmost grain of salt. But where I'm going with this is I believe Ethereum's more for building and it has more scalability than Bitcoin, absolutely. And there's more like you can actually do with it function. Like I think Bitcoin's more of like a store of value situation. And I'm going to touch on how I feel about Bitcoin a little bit more later. And, just keep continuously bringing it up a little bit at a time because I've been interested in Bitcoin for a long time. I've been accumulating throughout the past couple of years, like very smallly. Like throughout 2022, I bought $1 of Bitcoin every single day, and thus far that Bitcoin's worked out good. So I'm not saying like I've been going all out on it, but the whole thing is to me the difference of supply with the Bitcoin and the supply of US dollar. And when you see institutional money flowing in, like where is it right here? Like the $1.4 billion patient capital management just filed the SEC to buy Bitcoin ETFs worth up to 15% of the trust fund. And basically that's like a mutual fund that they have. And two of the BlackRock ones that are pretty major, like maybe it's their opportunity fund and I forgot the other one, but essentially their funds filed to also own the ETF. So that means that money is going to flow even more so into Bitcoin ETFs, and it flows more so into Bitcoin ETFs. It flows more into individuals, or sorry, into Bitcoin itself, and the benefits individuals that own Bitcoin, right? And like, here's a chart. It's not necessarily up to date. This was on March 9th, so this was sometime last week. And MicroStrategy just filed to issue more debt to buy even more Bitcoin. Michael Saylor's just whipping out his Bitcoin horn all the time and just doesn't even care. He's like, I'm going to buy more. He's like, what, aren't you going to sell one day? Don't most people sell assets? He's like, no, we call those people poor or something like that. Like I saw this hilarious clip. Let me just tweet this out real quick. Live now on YouTube. Yeah, my laptop's just slowing down so much. That's why I had to get this PC. And I got very lucky. I don't know if anyone that's been with me a while, I was talking about a while back, like, oh yeah, I got to get a PC and this and that. Like I got to figure it out. And ultimately I got really lucky where my cousin was upgrading and he's like, you could pretty much have all my old parts and you just need to buy like these few things and I'll be able to build it. So I was able to build this computer for literally $250. It's not worth that. I'm not saying it's like garbage, but it's actually like a good deal, right? And I'm very fortunate where he just happened to be doing that. So I was like, okay, like this seems like the opportunity. So that's why I ultimately have the computer I have now. Kind of moving on from the laptop. But yeah, so we'll see what happens with Bitcoin. And I understand the theory of Ryan Cohen buying Bitcoin for the GameStop balance sheet. And I find it very interesting. And again, I believe in Bitcoin, but I understand that that's like a very, very bold move. And it might not be like most ideal to all GameStop investors. That might not be what people want to see. That could sway opinions of different individual investors, and there's a lot that goes into that, right? What MicroStrategy is doing, I think, is very unique. I forgot that Tesla actually owns some Bitcoin as well. Obviously, Coinbase does, and Square does as well. And you see Riot, Hut, Mara; these are all miners, so obviously they own some. And then these are some of the biggest ETFs. Another thing I saw happen is the VanEck Bitcoin ETF filed to have zero fees, like 0% like fees in terms of like their management fee for it. So like if people are putting money into a Bitcoin ETF, all the money's flowing into Bitcoin minus the management fee, and all of them are like 0.4%, right? 0.5%. That's just generally how an ETF works. I mean, the amount varies, but point is VanEck, I believe that's what it was, like VANECK. Their Bitcoin ETF. They essentially were like, you know what, we're going to drop all fees until 2025. And that ETF then had a ton of inflows the following day because then essentially it's like, well, it's the most money going to Bitcoin, the most valuable or worthy of the ETFs, so to speak, right? Because it doesn't have a fee. Obviously, the fee will kick in 2025, and it's kind of the same thing. But I think it's a good marketing move on their part and a very good adjustment to this very hot market we're in terms of Bitcoin ETFs and the inflows they're seeing. And I saw a funny tweet the other day. I forgot who put it out, where it was like, remember when the SEC actually tweeted out that the Bitcoin ETF was going to be approved, and um, they tweeted out, then deleted it. Like, oh, our X account was compromised, but pretty much it seemed like they were trying to schedule the tweet, and they accidentally just tweeted it out. So that was a funny thing. And look at what's happened since. Obviously Bitcoin's done very well. It's dipping a little bit, and it's a unique thing, right? Like I think its store of value and what's happening with the US dollar. Like I was going to save this for later, but might as well go into it a little bit now. Like the debt is just skyrocketing and it's not going to stop. Like we always have a deficit. Debt as a percentage of GDP is well over 100% for a while now. And now the Fed is starting to price in, like I tweeted out the other day, like the schedule for 2024 with the FOMC meeting. We got one coming up March 20th. The Fed Watch tool, right? CME Group offers this, where 99% chance that rates aren't going to move, right? There's a 1% chance we get a cut. And then for next meeting, May 1st, there's an 8% chance we get a cut, 91% chance we don't. And then, according to, again, this is just a tool and it fluctuates, and I would say take it with a grain of salt, but it's just to give like perception of like the general like market outlook of what interest rates will be. And there's a 40% chance it'll be the same all the way in June, which doesn't match, prior dialogue of the SEC, but I think it's partly the result of hotter than expected inflation reports. And even Janet Yellen just came out and said, "Oh well, I kind of regret saying transitory. Oh my God, am I even saying that right? With inflation being transitory. What a tricky word. And it's like, oh yeah, you were throwing that around left and right, and now all of a sudden, oh, you regret it. Oh, okay. So you know how that goes. But 54% chance there is a cut at that point, another four, and then a 4.8 that it's cut even lower than just like a simple like 25 basis point cut. So if that's the case, it's about 60% chance we'll see a cut by June 2024. That's what the market's saying. Then you go to July, the likelihood increases. And then the farther you go down in the year, it seems that the market's pricing in like it's nearly guaranteed we'll get at least one rate cut by September of this year. So some people say like, the market's just still going up because one, there's just money flowing in, money has to go somewhere, and cash is just losing more of its purchasing power, inflation's raging on. And then two, it's also a matter of markets seeing like, okay, well, you know what? Maybe rate cuts aren't even coming because the inflation is still hot. So if rate cuts aren't coming, the market kind of naturally prices in even higher valuations. But then, like Apollo comes out. I mean, Apollo is a whole topic in itself, right? But they just came out and said like this is bigger than. They like doubled down on this prediction too. Like, oh, this is bigger than the 2000 crisis in terms of overpriced tech companies. Like it's even crazier than before. At that time, the average like price of sales was 25. Now it's 40. Maybe it was PE. I don't know, something of that nature. But the market's ever evolving, right? And you never truly know. But this market reader, right, would tell us that the market's anticipating there'll certainly be at least one or two rate cuts by the back half of this year. Originally, it was pricing in that we definitely have rate cuts this year. And since the market's always forward looking, it's kind of like the market's just looking, okay, well, as long as like it seems less and less likely that there's going to be a rate cut, then keep on raging on. Like obviously it's not that simple, right? That's just generally speaking, but let's hit the chat real quick. Chad says hello. Hope you're doing well. Tetron, welcome back. What's up, Jimmy Elitis? Jesse, thanks for being here. Hope you're doing well as well. Thanks for welcoming me back. Just getting back in the groove of things. Trying to be, how do you put it? Like I'm trying to be more productive, but like slow productive, like consistent. Like I was just watching or listening to a podcast on it yesterday where it's like You want to be effective and productive, but if you're rushing and like what you're doing is not good quality, then what's the point? You might as well go slow. Not to say I should move like a snail and not care, but I'm trying to just do what's best for me at the pace that's best for me so I can give you guys like the best quality product, the best quality stream, and like just keep improving. And I feel like I'm trying to do Twitter more, but I'm like, you know what? Or X, whatever the heck it is. YouTube's been what I've done since the beginning, so I think that's where I should focus more and do more prep for YouTube stuff. And if anything, tweet out stuff that funnels more individuals to my YouTube because this is what I like to do. Streaming, video. Like I'm having a good time. Like you guys are great in the chat and just in general with my content. Like I really can truly say like I have the most amazing followers, and even I take some time off. I'm back, and you guys are just so good to me. So I appreciate every single one of you for real. Bitcoin will always be a store of value. It scarcely only make it more valuable in time. I agree, Chad. I absolutely agree. And seeing that the dollar is just going to be printed more and more aggressively, and seeing this chart, like even look at 5-year chart just from 2018 went from like 22 billion or sorry trillion to 34 trillion right now. Like that's pretty nuts. That's pretty insane. And I've read about Bitcoin for a long time, and I wouldn't say I fully really grasped it until like a year or so ago. And even then, I was kind of like, I don't know. And obviously, it's easier to be validated seeing the price go up now a little bit. I'm like, of course, I wish I bought more. But I see it as you have to put your money in assets, right? Like I've been saying that for a while, but this is like a definitive asset that is decentralized, and there's institutional money now flowing into it, and even retirement accounts are inevitably going to be basically flowing into it, like not directly, but if a retirement account holds where is it, the patient capital management like mutual fund, as money's flowing into patient capital management mutual fund, some of the funds would inevitably then flow into the Bitcoin ETF. And you see this happening all now. Like the craziest thing is all this is unfolding while Bitcoin is at an all-time high. Excuse me, which I just find pretty remarkable and kind of just shows you where we're at. And the halving's coming up in a month, so that's another factor. And I'm not telling anyone to just go buy Bitcoin. It's not for everyone, but I see a lot of the things happening in the world, and I just believe in it more and more. And I think it just makes more and more sense. And then that does bring up the question, like with Ryan Cohen's capability to buy an alternative asset or some kind of security on the balance sheet, would it make sense for GameStop to put maybe a little bit of its cash reserves on there potentially? And I want to touch on this in a few minutes here too, but let's go to my profile real quick. Where this is as of Q2, I think it's like 396 as of Q3. I was working on the graphic. I have another tweet coming out soon. So imagine they put like, let's say just 10 cents per share or like 100 million into Bitcoin as a store of value on the balance sheet. I don't think it's the worst idea in the world because it's a small amount relative to your cash reserves. Your cash is inflating away. Although, if there's other things in the works, they want to use their capital in different ways, it's not a liquid asset. Like my thought would be if GameStop wants to, like Ryan Cohen ultimately decides and the company board of directors ultimately decides like we're going to acquire a little bit of Bitcoin, that should be seen as money gone, right? Not money gone, but not like, oh, one day we'll sell that if we have to do this instead. So if there's any intention that that capital would be used elsewhere, I don't think it makes sense. I think if you have a little bit where it's like, okay, we always want this store of value, we see what's happening with inflation, the US dollar happening around the world, like maybe it makes sense, right? And I'm just throwing that out there. Maybe you agree, maybe you don't. That's totally fine. Just throwing it out there. Because I saw a couple other people tweet about it too, and I'm like, that'd be pretty interesting, right? And no matter what Ryan Cohen does, whether it's with the business itself or he buys Bitcoin, whatever it is, like the media is gonna write negative stories and be like, oh, former meme stock Ryan it'll be former meme stock GameStop is trying to revive its meme status by buying Bitcoin. Sources say they are going to be buying Pepe coin, altcoin, shitcoin next, or something stupid. Or I think that's where I get nervous though. Where I'm like, maybe we're at a crypto top where you see all these like shit coins out there all over the place again, and people you see like videos of like Uber drivers being like, yeah, I made like 40% on whatever coin. And I'm not trying to knock anybody. I'm just saying when it's like it looks just too easy and like everyone's doing it, that's generally like a bad sign for things. However, where I think it's different, and this is why I personally believe in Bitcoin the most, and then I'm going to circle more back to GameStop because I'm digressing here. But with Bitcoin, you see the institutional money flowing in, and BlackRock's CEO, like Larry Fink, is literally saying, like, we see this as something that is a good store of value. It's this sudden like shift and institutions wanting to get in. To me, that makes it different, right? And maybe the altcoins will crash, but I think Bitcoin is going to continue to do well in 2024, especially with the halving. And ultimately, like my prediction for long term with Bitcoin is it's going to go through these cycles, but these cycles are slowly going to get less volatile as more and more of the supply is in the hands of hodlers, not holders, hodlers, people who are just truly holding for a long period of time, such as Michael Saylor. He's just accumulating more cash and buying more Bitcoin, right? And this chart or this number is out of date here, or going to be because he is buying more. Like he keeps issuing more debt to buy more Bitcoin, and it makes me laugh. These like parody accounts, not Larry Fink. Spot see ETF King, ticker IBIT, and that's BlackRock's Bitcoin ETF. But with Bitcoin, it's not like it's truly like institutional money flowing in and store of value, and it's not going to be able to be built on and like do a lot of different things with it. But it's this essentially the simplest way to put it is digital gold. But in my opinion, it's far better than gold. And I think with Ethereum and Loopring and Immutable and a lot of these other things, I believe in them, right? I believe in them. I'm just not sure I believe in the price per token and how that's going to work and how the supply works and all those different things. But I think what those offers, like scalability and like ability to build, and I believe in that, but that doesn't necessarily correlate to the price, right? Just because it's not that simple, right? So I don't know. I'm completely digressing here, and I feel like I want to wrap my head around crypto even more so before I speak on it too much because there's always more to learn, and obviously there's always more to learn with anything. But that's why I mostly talk about GameStop right now too. People who know me are like, "Oh, how can you pretty much only talk about GameStop?" I'm like, because one, that's what people are interested in, and what I do, and two, it's also something I know the most about, where I'm reading about it constantly and like I'm keeping up with it very much so. So I feel the most comfortable and most aware to talk about that, and just keep evolving because that's what you got to do. But let's see. Tetron, you have to promote yourself a bit better. There should be thousands here. GME info? Thank you. I appreciate that. You're right. You're right. That is probably what I need to do more. I need to promote more. And I think the key is probably writing more on Twitter and then just flowing it to the stream instead of trying to like also just build like on Twitter and, you know, get big on there or whatever, because I feel like video content's more of a sad, although they're adding video content, but you're right. I got to commit to that. And JB, yes, so I do hold Bitcoin officially. Fresh Maker, hope you're doing well. For those who don't know, Fresh Maker literally is the reason I didn't return this headset. Otherwise, I would have never figured out. This mic unplugs and plugs in. Who would have thought? Great job. Love the channel. Keep up the great work. Taco, thank you very much. Appreciate you tuning in. Let's get my man a bit late today. Hope I didn't miss much. You're good, Ryan. No worries. We're just getting this party started. Don't forget to drink water. Yes, 420 bong smoke. Love your name. And yes, I am going to drink water. Good call. Because yeah, I'm sweating. I don't know why it's so warm in here. I guess it's like pretty warm by me today. It's been pretty cold for a while. So all of a sudden it's like hot out. We don't really obviously have the AC on yet. But I was kind of hoping GameStop dropped the earnings out of nowhere without announcing the date. Me too, Ryan. Me too. That would be pretty sick, honestly. That would have been great. And why not, right? Like, if they're capable, I feel like they should have. I mean, not that they should have, but it would have been cool to see. Let's see. Take the torch and run with it. Don't forget to be humble. Wish you well. Because I can. Thank you very much. Thank you. I appreciate it. Yeah, I know. That's really, really, really a goal of mine. Like, it's easy to say, but all of you should hold me accountable. I want to stay, like, humble throughout what I do. Like, I'm never going to say to you guys, like, go buy this coin. Like, it's going to change your life. Like, I will never, ever do that crap. Never. I was a dummy who sold his Bitcoin years ago when it was at 14K, and I thought there was no way it could go higher. It's all good, Chad. You got to live and learn. I'm very fortunate, and I've said this in the past, where as someone my age, I have a lot of investing experience. It doesn't mean I'm this investing mastermind, but I've made all the dumb mistakes. Like the first time I was involved in crypto was like 2017. So I was in high school at that point, and I was just like talking to these kids, like, look at this, like we're just buying these coins and they're going up. Like this is crazy. And that was like even more so the Wild West. So by the time last cycle came around, in terms of like hype cycle of crypto, because obviously it tends to go in cycles historically. Last cycle came around, it was like, okay, like be very careful with any coin that's not Bitcoin. If you're getting in that, like you understand it's like complete like gamble, right? In my opinion. Of course, it's a whole topic in itself. But my point is, after seeing the first time and messing around the first time a lot, I was like, all right, I'm not really going to do that this time. And then after the crash in like post 2021 throughout 2022, I was like, okay, now everyone's going to stop talking about it, and then it's going to come up again in a couple of years, and then the altcoins will come after, and it's the same sort of cycle. They say like history doesn't repeat itself; it rhymes. But I've realized at this point, like, okay, like I like Bitcoin. I'm just gonna buy and hold. So I've been through a couple cycles and seen like how people are before and after. And again, not to say like I'm some mastermind and I've played it perfect this whole time, but just like time in the market just gives you so much experience. That's also like good advice I got a long time ago. Or I heard it somewhere. I don't remember exactly, but it's basically like it's better to have time in the market than trying to time the market. And that's also like dollar cost averaging, where I was buying $1 of Bitcoin every single day in 2022, and the price was fluctuating every day, but I'm consistently buying. So it's hard to know exactly when to buy. So it's dollar cost averaging. And I'm sure there's people that do that with GameStop and anybody in general, even if you're not doing like on a specific schedule, right? And you're buying GameStop consistently, then if you're doing that, you're basically dollar cost averaging. Like you're just consistently buying because you believe in the long term and you're not focused on short term fluctuations. And I think that's a great strategy with long term investing, because with short term, you don't truly know, or then you look at it and you're like, I really wish I bought more at that time, or I wish I waited a few more days. It just dropped like 8%. You start to think like that. But if you're just buying, 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 you're like, all right, well, it might have gone up more tomorrow. It might go down more tomorrow. You don't truly know. But you're like, I know I'm going to buy a little bit more, so it's all right. So I think that's really the best way to go about it with anything you believe in long term, whether it be Bitcoin, GameStop, anything at all. And if you think about it, that's really what a 401k is, right? Just consistently adding to your retirement account, and you're consistently essentially buying into the market regardless of the ups and downs. And then you have your company match, so that helps a little bit. And yeah, that's really, I think, the way to play the game. Of course there's always trades, and you can make short-term moves and whatnot. It's all about knowing thyself, but to me, that's what long-term investing is all about. Let's see. You're still winning. Yeah, she's right, Sharon. Or you're right, Sharon. Hey, Leeds, Jay. Hope you're doing well. Thanks for popping in. Taco Bandit. Everyone's here. Love to see it. Buying Jamie every day. Hey, if that's what you like to do, that's what I like to do, right? And what I have here is their all-time margins, which I guess we should really go to 5 year. Where, well, let's start it all, right? Where like they used to have a pretty consistent net margin historically, right? Like operating gross started to rise going into like 2016, and then gross fell off a little bit. Operating was pretty much all the same, and net was the same, right? So they had this net margin. And then obviously the dip started, the trouble started, and this is really where the stock was falling down a lot. And then right about here is where you have Ryan Cohen get involved. So you see gross margin fall off, and net margin starts to look a little bit better, and then gross margin keeps falling, net margin falls a little bit. But this is a time period of change and just implementing different things. And in my opinion, it's also where Ryan Cohen was really just looking at everything like, all right, like how am I going to go about this for like the next 5, 10 years? Like, what's the plan? Let's try this. Let's try that. Let's get this retail technology in place. Let's get systems in place to figure out what's working and what's not. So to me, all of that costs a little bit up front. So I think while they were cost cutting, they still had to do some spending. And that's kind of why this dip happened here. But now we see it coming back and just ultimate focus on the net margin. And another chart I'm working on, because I like making these like infographics, right? Where it's just easy to digest and just share. And I can pull them up on the stream like this, where I'm trying to make gross margins and net margins and just show it like year over year for GameStop for like the past 5 years and how it's kind of been fluctuating. and quarter by quarter. So keep an eye out for that as well. But oh, I totally lost where I was up here. But yeah, that's what it's about. Oh, wait, macro trends. Yes, that's what it's about, right? That's what it's about is profitability for them right now. Because if revenue's not growing and they're not going to do anything flashy, obviously it's not going to draw in outside investors that are looking for that type of thing, which I totally understand. Like I talked to people about GameStop and I was like, I understand GameStop might not be for you. Like it is what it is. But what I think people ignore is that like it's like if this company is consistently net profitable, even if they're not growing their revenue at this time, there's a lot of options they have and they're not going to be burned with debt or poor decision making or anything like that. Although I see that saw it out there somewhere where this one fund, I think it is saying like, oh well, I think GameStop needs to have another board member to be more diverse or something like that. And I'm sorry, but that sounds like complete bogus to me. And to me, if I was betting against the company and, consultants that were BCG were immediately fired upon Ryan Cohen entering the picture, and you haven't really had anyone else on the inside in a while, that would be one way to do it, right? I'm just saying. I'm just saying. You can think what you want with the information. You don't have to think, oh yeah, that's Tetron's a conspiracy theorist, right? But if I previously had influence through BCG, I as an individual, somebody betting against the company or whatever you want to think of me in this hypothetical scenario, right? Then I didn't have influence. The next thing I would do is try and get someone on the board with diversity and inclusion, right? Oh yeah, yeah, that's definitely why they need it. And it's like, is that really why they're saying that? After all this time, the board's been the same for a few years. Now suddenly that's what's needed. That's what's determined. And wouldn't that even have to go to a vote? So I mean, that's just something I saw float around out there. And to me, it's I don't know. We'll see. Well, if we hear more about it, we'll see it as something that needs more attention. I would say I'm not going to give it too much attention now, unless it becomes like a proposed vote or something like that. But tacos are life. It's true. It's true. I just had fajitas for dinner, basically. So that not exactly tacos, but same sort of kind of thing. It was pretty good. But all right, let's go look at the 10K again and just see like what are we going to look at year over year, or some notes I want to go through, kind of going into the year coming up. So these are some notes. I started this back in January and just never really like did anything with it. So I built on it a little bit since, but just want to share with you guys. I kind of touched on some of this stuff. So what's next for GameStop? They closed their York, Pennsylvania distribution center. They put out a ward notice, which is basically just saying that there's either going to be all employees or a lot of employees let go in the upcoming future. And pretty much there was a warn notice for the York, Pennsylvania distribution center saying all employees will be let go. And it's essentially going to be completely shut down throughout 2024, which I understand how this seems a little bit concerning, where this was something that was opened up after Ryan Cohen entered the picture. So this place is only about 2 or 3 years in operation. But again, excuse me, if they ultimately see that it's not improving margins and it's not what's best for the company to have this open, and there's a way to shift the product to different distribution centers and just have less and just do better on the shipping process, you can save a lot, right? So again, I'm not saying like, oh yeah, like this is like super amazing, but this is where you have to trust the management team, in my opinion, to make the right choice, where they say, okay, this is a tough decision to make, and like we opened this one a couple of years ago, but it's not going as planned. So we do have to wind it down and do what's best for the business. And then I also put here, they might close more stores in early 2024. So last stream I was talking about how, let's say you have a shopping center that has, let's say, 12 stores in there, right? You have a grocery store, you have a Walmart, and then you have a few miscellaneous other stores, right? If 3 or 4 other major stores in that complex shut down, it might just not get as much foot traffic in general. So that could kind of indirectly hurt that particular location's sales. and in turn make that particular location not profitable. And that's where I also think GameStop has the data and analytics in play where they can see that taking place potentially. And if they do, then they can say, okay, like this is a store we have to wind down. And again, not saying that's like this overjoyous, over bullish thing to wind down more stores, but if it's what needs to be done to run the business efficiently and profitably, then that's what has to be done. I think that's really what management's looking at it as. And right, in the as of Q3 2023 report, the right operating lease right of use assets was 570.4 million, and then operating lease liabilities was 394.8. So for the full year 2023, there was 4,413 lease stores open as of the start of 2023. So 39% of the leases expired throughout 2023. So it'll be interesting to see like how much so were those renewed. And then another 20% or 891 expire throughout 2024. So that's this year right now. So between 2023 and 2024, over 50% of the leases were set to expire. So they either have to extend it in some way, maybe potentially renegotiate in some scenarios, or ultimately decide that the store is going to close. So again, while closing stores is not the best news to hear, it does solidify the company's stance of focus on consistent net profitability. Company's focus is margin over revenue. And again, I understand where some people are like, oh, that doesn't make sense, but I think it does for GameStop. I really think it does, and I think it's just such a unique situation where that's what makes the most sense right now. And then another thing I briefly touched on in the past, the NFT marketplace got shut down, which again, I'm not sure if anything's going to happen with GameStop Player at this point. We haven't heard any developments with it, but even if GameStop isn't directly part of Web3 gaming, I think Web3 gaming is here to stay. I think it's on the come up. I think it makes more and more sense where people want to truly own assets within a game. And I think it has to be adjusted in a way where the name NFT, in my opinion, or like the title of NFT is staying forever. But like what an NFT is still valuable, if that makes sense. So I think there has to be some kind of bridge where people start playing games and naturally begin to accumulate NFTs, but they don't even realize it. It's actually just them truly owning an asset within a game. It just has to be super easy for the average gamer that wants nothing to do with NFTs. They hear the NFT name and they go, oh, cringe. Oh my God, NFT. Those are so stupid, blah, 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 right? It has to be migrated in some way where that true individual ownership can take place for like in-game items, in-game item, in-game skin, whatever it may be. You have to be able to truly own it, but it's super easy for someone to do that. And also they don't see it as like, oh, I have NFTs, right? Because I talking to other friends that are gamers, not like the closest friends, like, oh, NFTs, oh my God, that's the stupidest thing ever. Like, and I'm like, I see what you're saying because you think an NFT is just pictures of bored apes and just like weird like characters that have no underlying value. You don't see it as like an item within a game, and that actually allows you to have true ownership because if something were ever to happen in that game and they just wipe out like everybody's progress. Oh, sorry, everything you worked for in that game is just suddenly gone, right? I mean, that's a very loose explanation, but between the wallet and NFT marketplace, they've cited regulatory issues, and it makes sense, right? Because look at the way the SEC has gone after some people. When you went after even like Kim Kardashian with some kind of like pump and dump allegedly, and then they just reached a settlement or something weird, right? But wouldn't you think, right, if GameStop, like, personal opinion here, more than welcome to disagree, if GameStop has a target on its back, wouldn't this be a great way to go about targeting it? And maybe they got wind of that in some shape or form. Maybe, their general counsel, their legal advisors are saying, like, hey, like, we're really towing the line here, and they could sue us. And legal fees are a lot, right? Like it's a whole mess to deal with regulatory issues. So maybe it's something where they want to bring it back in the future. I'm not saying that's definitely going to happen or anything like that, but I think, Web3 gaming is here to stay. And I think they see that perspective and they see things moving in that direction with true ownership of assets in games. but can they truly capitalize on it? And if it's not through player, is it in some other shape or form? And that would bring me to margins again. So, what do margins look like in 2024? Ideally, positive every quarter. Although I could see maybe Q1 and Q2 still being slightly negative for 2024. Obviously, we're looking a little bit ahead at that point. We're in Q1 right now. So, if you bought something at GameStop yesterday, that would be a Q1 purchase, right? So, I don't know. It's hard to say because SG&A is a major factor. Those are two of the generally slower quarters. But if they were in a spot where every single quarter they could turn a profit, even if it's their slower quarter, I think they're in excellent, excellent shape. And they're just being extremely underestimated by the market as a whole. And yeah, that begs the question: are they in position to be consistently profitable? This quarter coming up, it will tell us like, do they have the ability to be full year profitable for a year that was 2023? And then do they have capability to continue that in the next couple quarters? Maybe, maybe not. We'll have to see, right? It comes down to execution. And then ownership, DRS is 25%. That hasn't moved in a while. And that's a whole conversation itself as to why that might be. There's the heat lamp theory, there's some other suspicions out there. But I do find it a little bit interesting that numbers barely changed, like almost over the course of a year now. And about 12% of the shares are in the hands of Ryan Cohen at this point. And then another 1% is amongst the other insiders and top executives who are also compensated in shares. So the company's performance, there is a factor in how much so that they are compensated. So just remember that in terms of like how much does management really care? Well, part of what they earn has to do with the company's performance essentially. And I think that's a great structure and it just makes sense for companies to do that in general because like hey, if we drive this company forward from the top down, then I'm going to be pretty much compensated for it, or the asset that I have, which is GameStop stock, will be worth more because I'm working harder day to day. So approximately 29% at the time I wrote this was held by institutions. So show me another stock with that low of institutional ownership. It's interesting, right? Where it's like so many shares are in the hands of individuals, but so many shares are not in the hands of institutions. Like, yes, there is still a lot in the hands of institutions, and share count and how all that works is a conversation in itself. And I was just looking back the other day, what was it, Global Links or something like that, where the guy bought like over 100% of the shares outstanding, and somehow the shares were still trading the next day. And basically, the case got thrown away because oh yeah, like OTC, like the brokers weren't handling it right. They didn't handle the split right, and they basically tossed it to the side as if nothing happened. But one guy bought 110% of shares outstanding, and there were still all these shares trading the next day. I think it was Global Links. I was just reading about that the other day, and while that was OTC, that's a little bit different. I'll just let you think what you want with that information. And then lastly here, the balance sheet remains strong. They're still earning a decent amount of interest on the cash equivalents, and marketable securities. And when I say decent, I'm talking about, pretty much the federal funds rate, probably a little bit over 5% on that money as a whole. What's the plan for the cash? Buybacks, maybe. And that's actually what kind of led me to my question over here on the poll. And I found this very interesting. It was very split. I had 815 votes. Thank you to all of you that voted. If you don't already, follow me at Tetron Invest. Greatly appreciate that. And also drop a like if you don't mind. Also appreciate that. But I said, do you think GameStop will repurchase shares in 2024? 50% said no and 50% said yes. And a bunch of you commented too, some various opinions. And we'll have to see. I'm pretty in between where I'm like, I think it makes sense, especially with a generally lower share count where buying back 2% of the shares outstanding, I think that could make a pretty significant impact. But it's like with the nature of the situation, it seems like it would be good, but at the same time, like it seems like it wouldn't because the power that market makers have, right? And I'll let you think about all that in any way that you will, but I found it very, very interesting that the poll is literally almost like a 50-50 split in terms of what people thought should be, like, if they should or shouldn't repurchase shares. Let's see. They need a cat on the in the board. Meow the cat that roars sometimes. Meow, you should run. Can't you be put like on the next annual meeting? We'll report. We'll be like, okay, meow cat that roars sometimes up for election for board of directors. Vote yes. Nah, that'd be funny though. It would be funny if it was just like a random name you could just put on there, or it was like write in a name that you want to vote for. I mean, obviously that wouldn't happen, but so I mean, you guys can let me know what you think in the chat right now about repurchasing shares. Where it really like it's hard to say. Like I go back and forth because I'm like, with the nature of the situation, would it be impactful because the share count does seem relatively limited, or is it just more funky stuff is going to happen amongst market makers and whatnot? Think what you want, but also like outside of that, it becomes, well, what is the company anticipating doing with that capital over the next like year or two? What are they moving into? And you also have this tweet from Ryan Cohen looking for strong engineers with cloud, Java, and web experience. Email team at GameStop.com. We'll be working personally with top candidates, which is where obviously I said I was absolutely qualified. But what could that be for? Could that be something they're going to invest in? Because I feel like also like where I would lean no is if you're going to invest more into GameStop itself and building up the brand of just to be not to be more digital, but where you're going to try and get involved in some different things or have a presence in some different things and you use the GameStop name and that's going to cost money, right? And if that were the case where it made profitability no longer, I would probably be okay with that so long as it showed a path. Like it was basically research and development in some shape or form being spent towards like ultimately getting revenue to rise again and then, that revenue to be future net profits down the line, if that makes sense. Like that's a very loose thought. But it really depends like what they're trying to do and the nature of GameStop. As long as I followed it, is to be very quiet about what they're doing, and then out of nowhere they just deliver it, right? Such as Woosh's song, "Deliver It." So part of me wants to hear more about what's happening with the company, but also the other part of me understands where that's just not how they're going to do things. And when I invested in this company, I understood that going in, right? That's the nature of how they're going to do it. They're going to be very quiet, and you really do have to trust the management team with that strategy. And I totally understand where some people think, oh, well, then I couldn't be invested. I don't know what's going on day to day. But some of those that the all people that also don't know what's going on are the people that are also betting against it, right? And I don't know if anybody saw the clip. I should have pulled that up beforehand of the Palantir CEO Alex Karp. Which, by the way, also I think Palantir is going to be a great company in the coming years. Like what they're doing with AI, they just seem so far ahead. I mean, that's a whole conversation from the other day. But I just love how that guy is too. Like he does not give a flying fill in the blank. Like he just says what he thinks. He's gonna wear a white T-shirt and run his company and just focus on what he does. He's like, he pretty much said like, yeah, the people betting against our stock can keep doing cocaine and whatever, and we'll keep doing our thing. It's just like a funny ass clip of like talking about how short sellers suck, basically. And yeah, I mean, I understand short selling is an aspect of the market, but it's a crazy thing to think that when I was reading about the Global Links case again the other day, it was like the guy's argument that was suing the DTC basically was like, how many other companies is this happening to where maybe they would have turned into something major, but they never were able to like properly raise capital or get off the ground because they were so attacked. And that's why if I somehow had this massive business one day, Tetron becomes this empire, I don't think I'm ever going public now that I know what I know about how the public markets works and all these different aspects. So never catch Tetron as a public stock. Never ever, no matter how big I get. But obviously it need to be pretty big before something like that happens. But my point is like I think going on the OTC market, like it's probably pitched as like, oh, you have more access to capital, you can work your way onto the NASDAQ and then to the S&P. And my thought is people don't know the inner market workings work, right? Or the inner pipes of the market just think, oh, that sounds great. But who that's being pitched to is somebody that's focused on like the business they're creating, not necessarily somebody that's having sophisticated knowledge in terms of how markets work. And I think that's how some of these companies wind up on the OTC or going public, getting convinced to go public, very early on when maybe they shouldn't have, because it's like, oh yeah, well think about all the money you can make, the capital, you'll be able to sell shares. They just get pitched this whole thing, but then it could in turn ruin the business, right? Like that's obviously not always the case, but I could see how that could happen, right? And then maybe there was going to be the next Microsoft, and it just never came to be because when it was like an OTC stock, they couldn't raise capital because it was just being shorted endlessly, right? And OTC markets are very risky, right? I'd say be very careful if you are holding any OTC stocks in any way. It's just over the counter, it's not like on the NASDAQ or anything legit like that. And that's a whole conversation in itself. But just, generally speaking here, and obviously I've completely digressed from Ryan Cohen's tweet here, but they need the money to grow revenue. Yeah, I think you're right, Freshmaker. I think growing revenue should be a prime focus. But where I go back and forth, it's like, okay, well, if you're not going to grow revenue now at this time, maybe use a little bit of that capital to repurchase shares. But then at the same time, it's like, you're not just suddenly going to have that capital instantly available again in the future. So you do want to be very careful in how you allocate it. And Anthony, thanks for popping in. Much appreciated. Tetron Empire is unstoppable. Kramer's wife's boyfriend. Thanks for being here, and I appreciate that comment. Thank you very much. I hope to be. But just gonna keep building, it's crazy. I'll tell you, from talking to people my age and just seeing what's happening, it's very difficult to start your life as a young individual in this day and age. And I'm not like trying to whine or complain or anything. I'm just saying, like, the reality of it is, like, theoretically, like, people could, move out, right when they get out of college, right? But if you do that, then it's very hard to accumulate because the cost of living is so high. So unless you're doing this like crazy job, like you're making like a ton of money, it's extremely hard to start, because also you got to take time to build spending habits. You got to take time to make good habits in general. And that's something I'm working on with myself every single day, trying to get better at, is just like making better habits. But it's incredibly difficult for young people right now. I can tell you that for sure. Like, and there's people who go to school, they get this degree and then they can't even get jobs in that industry. Obviously this varies, and I'm talking very generally here. And then they're just working like a pretty standard job, making like a decent wage at like a Chipotle or something like that. But then they're like, okay, well, I just spent all this money on college. I can't even get a job. And it's just people are feeling stuck. That's all I'm saying. Like, I don't know. I'm going on another tangent here, but I'm not saying like I feel stuck, and I'm blessed to have this YouTube as like what I'm doing on the side, like beyond my job. But it's just a crazy world out there, and seeing like the money supply, like the total debt go up and the money supply go up, it's just going to widen the gap between the lower class and the upper class. So I'm trying to raise my way to the top, right? And I'm not scared to say that I want to be rich. And to me, being rich is not just monetarily, it's also like mentally, physically. Maybe rich isn't the right word then, right? Like, you just want to be in good shape, mentally feel good, be able to take care of the people you care about, and just give, like, I don't want to, like, it'd be so nice in the future to be like, everyone come to my house, like, we're having a huge party, like, don't bring anything, don't worry, like, I got it. Or like, oh, we're gonna have this like great dinner with like my future family, right? Something like that. Like, that's to me why being rich is important. Like, and that's easy to say without money, right? You might think, oh, when Tetron gets money, he's gonna become corrupt, right? I don't think, like, that's just not how I think about it. Like, I think you have to want to become extremely wealthy. I guess that's a better word, not rich. You want to become wealthy. Health is wealth. And then also monetarily, you want to become wealthy, because also the wealthier you become as a whole, like beyond money, everything, like, it just gives you more flexibility and more capability. And I'm very lucky to like see that perspective, I think, at my age, and it motivates me to like just try and be better. And again, I'm not saying I'm perfect and like I had this easy plan and it's all that. And I'm completely just going on tangents tonight, but it's a crazy world out there. And in a way, it like makes me crazy, but I'm kind of glad at the same time because it makes me motivated. Like, okay, like I need to do the most I can now because it's not going to get any easier. There's no sign of it. And yeah, that's my rant slash TED talk. Let's hit the chat. Palantir has 50 billion plus shares. Can it really move? My bad, 2 billion. Yeah, Taco, that's a valid point. For me, how I see it is like they are starting to repurchase some shares. Last I read on it, but really the thing I see with Palantir is it's the data analysis. So one, they already work with governments for a long time, and two, now businesses are realizing, every business is talking, oh, we're doing this with AI, we're doing that with AI, but like they don't actually know how to use it. Whereas what they can do with Palantir software is if you have a trucking company, right? This is a very random example, um, that transports goods from multiple warehouses to multiple distributors and distributors to multiple retailers, right? Or maybe you're a company that sells, I don't know, let's just say pens, and then for some reason you have a whole shipping network for your pens, right? You could use Palantir software, implement it, and think, okay, well, actually, we should be doing less shipments per month. We should be doing more shipments from less warehouses, and we should expand the amount of retailers. And that's a very, very loose example, but essentially it allows the data of like what the business does and finds ways to potentially optimize it more. And then humans, like actual like people like me and you, not robots that are going to take over the world, can then analyze that information and go, okay, well, yes, that's actually a really good idea, but this aspect of it isn't going to work because it's not factoring in this. So I think Palantir is kind of a tool, like their software, that is like the crossover between like AI, like solving issues, and then also like humans interacting and be like, okay, well, actually now consider this factor. Like again, I'm speaking very generally, but I think like what they're doing and their product is very, very unique and going to become very, very essential to businesses wanting to automate more and just improve more. But that's a very loose explanation. I'm still wrapping my head around Palantir more and more. But the share count is definitely a major factor. Sells or dittos. Ape Frapper Pro, thanks for hopping in. Appreciate you. The thing is, will repurchasing shares do for the company? The share price will rise, then what? Money's gonna is gone, then the business stays the same. Great point. Very good point, Freshmaker. Very good point. Because if yeah, you're right. Because if they do that and there isn't some other aspect of where they're taking things or perspective of where they want to go, then you're right. Yeah, sure, there's less shares in the market, and yeah, maybe that caused some upward trajectory in the short term, but then in the long term, it could hurt them because like, oh, we now we're doing this thing that's working well, but if we had more money to invest in it, we could make it even bigger. So that's a very valid counterpoint. I appreciate that. And I just think it's still incredible though that the final result was like nearly exactly the same. Like there was one point I was looking, I was like, it's exactly 50-50, but we'll see. Because I think, even if they did, it would have to just be like a small amount because you want to keep, like, no matter what they do, I think you always have to use a small amount of capital and you want to keep like this balance sheet strong, which as of Q3, I started working on the graphic. It was like 396 a share, and total cash equivalents, marketable securities was just over, I believe, 1.2 billion. And I just realized after all this time, I've looked at this graphic a million times. There's two decimals here. Excuse me. This first one is supposed to actually be a comma, but it's one of those things. Probably no one noticed it until I said it right now anyway. But yeah, I think ultimately, no matter what, like right now, keeping the balance sheet strong is really important because one, you never know what's going to happen in the short term, and two, once something starts working, you want to have the capital to keep driving it forwards and researching it and developing it. And what that exactly is to be seen, and how it goes, I couldn't tell you. But let's see, look what happens to BBY. They had a lot of cash to spend on share buybacks, and look at the result. Mr. Dashmark, very good point as well. Although I'll say with Bed Bath & Beyond, They spent pretty much all their cash on buybacks and had no cash left. They were still, while they were still burning cash, and they had a lot of debt on the balance sheet. Like they had like 5 billion at the time they went bankrupt, something like that. So it's like a little bit of a different situation, but at the same time, it is a very valid point because if Bed Bath didn't spend all that money in that period of time where they were buying back shares and like they were pumping it as like, oh, this is a great thing, like we're buying back shares, then they would have had more time to, like they could lose money for more quarters and they could have prolonged the bankruptcy and maybe made some kind of change before they went completely under because they would have had more cash to work with, right? Which again, it's a little bit of a different situation, but I absolutely see what you're saying. So, and this is why, it's great for me to do these streams where like you guys share these points and I'm like, sounds good on paper, like a share buyback, right? But maybe it's really not the best thing. And again, that's why I do these streams and we talk about it, and it makes me think twice. I'm like, yeah, you know what? Now I'm leaning more no than probably I was before at the start of the stream. So maybe something we see in the long term. Because yeah, Pat, I see you have like a good point right here. While I do like them to do it, I don't think it's realistic this year. Which yeah, it's true. It could maybe just not even be this year. It could be a year coming up, right? Maybe a couple years down the line when things are really rocking and rolling. They have net profitability. They're working on something that's driving their revenue forwards. They're improving it. And then, okay, maybe now we'll start repurchasing shares, right? Maybe that's something more so that we'll see. But I'm just excited for the quarter coming up. And the full year report, we haven't got a full year report in one full year, right? Shocking, isn't it? No, but it's always nice to see the full report because it gives you an idea of what the full year looks like. You get this total store count, you get just a little bit more information, like on a 10K than you would on a 10Q. But still, any business update I think is nice to see for GameStop. And it feels so long going from quarter to quarter. And I feel like this one felt like especially long. It felt like for weeks people were saying like, all right, any day now we should be knowing what day GameStop is set to report earnings. And then it was like, oh, maybe they're not even going to say the date they're going to report earnings. They're just going to report it out of nowhere, which I think would have been pretty epic. But at the same time, it is what it is. Like the numbers I think are going to speak for themselves. And before the earnings, I am going to come up with like official like Tetron predictions. That's something I did in the past a little bit, and I suggest you guys do the same because why not? Analysts make theories. I think any individuals that follow any individual stocks should do the same in theorizing what they believe the EPS will be, the revenue will be, like based on the best of their knowledge. And it doesn't mean anything if you're right or wrong. Like it's all just a prediction at the end of the day, right? Like whether you're an individual or an analyst, you're still something that's just predicting based on information they have. And I feel like there's a lot of times in the past, not even just talking about GameStop, where analysts have just been so dead wrong, and they're supposed to be like the geniuses, right? Like the smart ones. Like you can look at it and get perspective on it, but I think like take any analyst's opinion about what earnings will be with a grain of salt, and take anyone such as myself. I'm just a guy on YouTube, right? Opinion with a grain of salt. Like look at it yourself and think, okay, like I think it's this because of this, and then maybe that is a factor, right? Like again, I'm just speaking very generally here, but stay tuned for that, and I think we'll just about wrap it up here. But let's do the channel one more time. They ended the, let's see, look at having with BBY, they had a lot of cash to spend. Platinum Sparkles, thanks for popping in. Appreciate you. Good to see you. Hope you're doing well. They ended their last year at negative 3.5 billion. Exactly. Yeah. Their net income was not good, and they were just spending an absurd amount. And their turnaround plan, I think, was like, oh yeah, like we're going to have an in-house brand or something like that. But at that point, like things were just weren't going well. What I want to see is grow revenue, make more profit, pay a little dividend. Thank you, GameStop. That would be nice. I think you're right, Platinum. Yeah, that's a good point, Freshmaker. All this talk about share repurchases kind of makes me forget about the idea of a dividend. And while I don't think a dividend is going to come in the short term, I think a dividend in the long term would be nice, and also incentivizes more just long-term holding, right? Because if you hold an asset for a long period of time and then it starts having cash flow, essentially, that's always nice, right? Because in this world we live in right now, I think for individuals and businesses, like cash flow is so important because you never know what tomorrow is going to bring. And when I say this world, I mean this economic world. So cash flow is important and very nice, right? So definitely dividends could be on the table in the future. But then you're right. I think if dividends kind of come into play, then share buybacks might not be something we see ever or for a long time, right? So we'll see. Maybe I'll have to run some more polls like this, where just see what people think. You know, not saying like, oh yeah, like I think this or that, but just throw the polls out there. Why not? Like, should GameStop buy Bitcoin? Should GameStop do this, do that? And then it'll just be like a way for myself and all of you out there just to gauge like what some general GameStop investors think, right? So stay tuned for more polls on Twitter as well. But yeah, for real, this time I'm actually going to wrap it up. This curve, crazy. It's only going to get crazier. The total debt. Every time I look at this, it boggles my mind. Like, this is how it works. And when you just think about how money works, it's like, it's just truly mind boggling. Like, money technically is just a fugazi, a fugazi. It's a wazi, it's a woozy, right? Like, I always think of Matthew McConaughey in Wolf of Wall Street. It's a, and it's right. It's actually true. And yeah, I think owning assets right now is more important than ever, whether it's GameStop, Bitcoin, or S&P, alternatives, whatever you believe in, right? I think owning assets now as the dollar supply just is ever increasing and around the world, like inflation is raging on and it doesn't show any signs of slowing down. So with that being the case, I think just owning assets and understanding the importance of owning assets is becoming more and more important. So thank you guys for tuning in. I appreciate you, and I hope you have a great night.